Hello everyone, my name is Ashutosh Kar. I'm a chartered accountant, certified public accountant from USA with a PhD in commerce. I've started this YouTube channel to post videos relating to US taxation for both individuals and for businesses. To start with, we'll be posting videos relating to US taxation for businesses. So without any further delay, let's start the video.
The second topic that we'll be covering under this chapter 2 is payroll taxes. Payroll taxes includes Social Security, Medicare, federal income tax withholding, and federal unemployment taxes. Federal payroll taxes are same for all US businesses. However, state payroll taxes changes depending on where the business is and where our employees lives. The first payroll taxes that we'll discuss is FICA taxes. FICA is a US federal payroll taxes covered under Federal Insurance Contribution Act and deducted from each employee's paycheck. Under this, both employer and employee contributes an equal percentage, which is 7.65%, which brings to a total of 15.3%. The 7.65% constitutes of two parts. One is 6.2% covered under Social Security tax and the other 1.45% covered under Medicare tax. Now let's understand how it is getting applied or what the limit for it. The Social Security base is set at $147,000 in 2022. This means you will pay the Social Security tax of 6.2% on your earnings up to $147,000. Any wages over and above it, we are not going to pay Social Security tax. However, Medicare tax doesn't have any limit. You are expected to pay 1.45% tax on your entire earnings. On top of that, an additional Medicare tax applies when income exceeds on one of the following threshold amounts. Like for married filing jointly, the limit is $250,000. Married filing separately, it's $125,000. Single head of household or qualifying widower is $200,000. Now let's understand how the employers are going to report the FICA taxes. They're going to report it on a quarterly basis using the form 941, which is called Employers Quarterly Federal Tax Return. It has to be filed regardless of whether employer has paid wages or not. However, there are some exceptions or some relaxations as given to small employers who can file instead of quarterly annual federal tax returns, like which is called employers annual federal tax return using form 944. Small employers have been defined like those whose annual liability for social security, Medicare, and withheld federal income taxes is 1,000 or less. Any corrections to previously filed Form 941 or Form 944 are to be made on Form 941X and 944X. There are certain exceptions wherein the FICA taxes doesn't apply, like children under age 18 who are employed by their parents, qualified retirement plan contributions from employers, services performed by students employed by schools, colleges, or universities, some church and qualified church control organization wages, some state and local government salaries. The second taxes that we're going to cover under this is FUTA taxes. FUTA is a tax that employer pays to the federal government. Employee doesn't contribute anything. Nothing is subtracted from their paycheck. The tax rate is 6% and it is applied to the first $7,000 you are being paid to employees as wages during the year. It is often referred as FUTA wage base. The state wage base may be different based on the respective state's rule. We'll be discussing the state unemployment taxes in the next video in detail. There is no FUTA tax for self-employed individuals. And now how this FUTA taxes are applied, like applicability of it. If a company pays 1,500 or more in wages to employees during any calendar quarter or employs one or more employees for at least for some part of the day in any 20 or more different weeks during the year, it must pay federal unemployment taxes. It has to be reported on Form 940. Even though there is an annual reporting for FUTA, the tax amount to be deposited at least quarterly if it is more than $500 of the calendar year. If the FUTA tax liability is $500 or less in a quarter, you can carry it forward to the next quarter and you can continue to do so until the cumulative FUTA tax liability is more than $500. Deposits of these taxes are to be made through electronic federal tax payment system, which is called EFTPS. If it doesn't exceed this $500 threshold, you can pay the tax while filing annual FUTA tax return. There are a couple of things that the companies need to keep in mind, like Form I-9. Employer must verify each employee is legally eligible to work in US. An employee must complete US citizenship and immigration service using the Form I-9. And as far as employees are concerned, when you start a new job, every employee typically fills a W-4 form. The amount your employer withholds from your check is dependent upon the form W-4. The form relates to information such as your marital status and number of dependents, which ultimately determines the amount that will be taken out for taxes. If you want to make any changes, you can download the W-4 form from IRS website and submit it again to your company's payroll department. In the next video, we will discuss federal income tax withholding and as well as the state unemployment taxes. Thank you.
Hope you have liked the video. If you have any suggestions, feel free to share your feedback in the comment box. Looking forward to hear from you all. Thank you.